we had a great online conference this morning with over 160 people on online. So hopefully you'll be staying with us this afternoon right up to our virtual drinks reception at 3 o'clock, and mine's a red wine, please. As you'll have heard this morning, the programme has invested in some great energy system designs. And going forward, the emphasis is now to support the projects to find private investment. So I'd like to introduce my colleague Matt Hastings from Innovate UK to share with you our strategy and introduce you to our 6 private investor speakers. Over to you, Matt.
Great, many thanks, Jenny. Can you hear me okay?
Yes, that's great.
Fantastic. So good afternoon, everybody. I hope you had a fantastic lunch. So it's my great pleasure to introduce the investor session this afternoon. Big thanks to our investors for finding the time to join us this afternoon. I think you'll find that we've got an absolutely cracking panel with a huge amount of expertise and a real sort of focus on clean growth in particular. So we couldn't ask for a better panel of speakers. The objective of this afternoon's session is to really provide you with a bit of an overview of Innovate UK's net zero investment strategy with a particular focus on prospering from the energy revolution. We also want to try and give you an investor's perspective on the do's and don'ts of securing investment. I'm sure many of the businesses around the virtual table have tried, and some have succeeded and some have failed. And we're hoping that these investor insights will really help to provide much more guidance to the business community to accelerate investment into this space. And then finally, we also want to give you a feel for what different investors look for at different stages of investment. So we've got some early stage sort of seed and angel investors, as well as some sort of mid-stage corporate venture capital type organizations, and a few later stage type organizations as well. So without further ado, I will ask Natasha to crack on with the slides.
Matt, you should be able to move them on.
I'm trying to, but unfortunately the box that was in the bottom left doesn't seem to be in the bottom left anymore. So there we go. Great. So in terms of who we've got on the panel today, I'm delighted to have Cam Ross from the Green Angels Syndicate. We've got John McKiernan from ESB in Ireland, who also represents Free Electrons, Joanne Fisk at Gravis, Ben Watts from Engie, Ingmar Grebien from Goldman, and Guy over at Ingenious. So I'll be handing over to these guys in a sec just to give you their 10-minute presentations, and we will commence that activity very shortly. But just before we do, we're going to now just cover off our net zero investment strategy in a bit more detail. So Natasha, if you wouldn't mind clicking through, unfortunately I'm unable to do so at this end. Great, thank you. So this is animated, so we'll just go through step by step. So as Rob mentioned at the kickoff at the beginning, some of PFER's objectives are really around proving or disproving that local energy systems are sort of investable and scalable. And aligned to that, we want to try and unlock about 10 times future private investment into the net zero system sector in the 2020s. And, you know, whilst it's quite difficult to provide a benchmark of existing investment into that space, you know, at a high level, we're looking to try and leverage, you know, hundreds of millions of pounds at a minimum. Next slide, please. Thank you. So our strategy ultimately has 3 core pillars. The first one is alignment. Next click, please. The second one is around acceleration. Next click, please. And the third one is around value, and especially sort of leveraging value both for businesses, systems, and investors. Next click, please. So on the alignment pillar, we've spent a lot of time, you know, not just over the course of the last 6 to 12 months, but Innovate as an organisation has spent many years talking to investors, and I'm sure some of you know my colleague Christian Inglis and Bruce Coley have been heavily active in this space for a long, long time. I think we've all acknowledged this similar issue, that there's quite a lot of frog kissing going on. What do we mean by that? Well, we're seeing that investors are having to kiss quite a lot of businesses before they find their prince or their princess. And from a business perspective, we're seeing a lot of businesses kissing a hell of a lot of investors before they find the right fit strategically and financially for their organization. So the first pillar of our strategy will see us develop sort of tools and services which enable businesses and investors to connect more efficiently and effectively. So you should see some stuff around that in the not too distant future. When it comes to acceleration, I'm delighted to announce that we are launching a new competition in the following months. That competition is really focused on delivering investment into one of the areas of the energy system that we feel requires significant acceleration, and that is around data. All the projects have sort of referenced issues in terms of securing data or leveraging data for new business models or for consumer applications. The second pillar of our strategy will ensure that we deliver against those challenges. So the new competition will be called Modernising Energy Data Applications and Investment. And this builds upon a competition which we currently got live called Modernising Energy Data Access. This was referenced a little bit before. It's around a common data architecture which enables the ingestion of multiple data sources and different formats. That's almost the back end, if you like, of the system. We then will use this new competition to stimulate novel business models around sort of front-end data applications, and we're going to be looking for those applications to cover you know, a wide variety of different data inputs. So ideally we're seeing investors and businesses sort of partner to deliver energy data applications that include things like mobility, heat, power, but also finance and geospatial data as well. So a really interesting competition. We're shooting for about 4 to 8 million as part of that competition, and more detail will be released on that in the not too distant future. So that is the second pillar. The third pillar then is around really leveraging significant value into this space. You know, Innovate's approach to local systems has always really been around scale. You know, we can do a lot of these things on a small scale, but really to demonstrate them properly and make them of material value to the system, to government, to regulator, you know, we really need scalable investments and business models. So this pillar has two categories within it. The first one is around systemic investment structures, which is a little bit meaningless on this slide, but what that really means in practice is we have a hypothesis that there is significant systemic value from local energy, and what we would like to see developed is new sort of corporate structures, if you like, or business structures, which incorporate the value chain of a local energy system. So, for example, at the moment, we're seeing investors invest in quite a siloed way. You know, they understand storage, great. They understand wind, great. They might just understand market platforms, great. And they might get single-digit returns on each one of those investments, and you know that in itself is fantastic. But if they can actually invest in all of three of those organizations as part of a system and a systemic investment, our hypothesis is that they could receive double-digit returns as a result. So we'll be doing quite a lot of work around some of those structures and models moving forward. And then finally, we are in discussions with BEIS and a wide variety of other finance colleagues around stimulating something akin to a net zero systems growth fund. And still quite early days on this. I think it's fair to say that there's a few distractions at the moment, but nevertheless, there is no shortage of capital. What we would like to see is a blended growth fund which combines both private sector capital and public sector capital to really fill the gaps of where the business community and the finance community is at the moment. So that's it from me. I just wanted to give you that quick overview and just finish by saying, you know, we really invite your feedback on this, and we'll be really keen to kind of get your thoughts and recommendations off the back of it. And what I'd like to do now is introduce our first speaker, who is Cam Ross, Director at the Green Angel Syndicate. So Cam, over to you.
Thank you very much, Matt, and welcome to everybody. Yes, I'm Cam Ross from Green Angel Syndicate, and a very great pleasure to talk to you this afternoon about what is probably the early stage of our timeline of investment that Matt was talking about, because angels typically invest at the really early stage of a business when they're looking to commercialize their product or their innovation for the first time, and then to find their first few customers. And that's exactly the space where Green Angel Syndicate invests. And it was a great pleasure actually to watch the presentations from the morning session to see some of our portfolio companies mentioned there as partners in some of the localized energy projects that are ongoing. It's really very healthy to see all that happening. So I'm going to talk to you a little bit about Green Angel Syndicate. We are the only angel investment syndicate in the UK that explicitly only targets companies that are tackling climate change and global warming. And this niche focus for us is does two things. One, it allows us to target our investments very clearly and precisely. And secondly, it attracts to the syndicate a number of very highly qualified and experienced members. So we have around about 200 members at the moment. That's really grown explosively in the last couple of years as the focus on climate change and global warming has really ramped up, as all of you will have seen, of course. And in the last few years, we've made 38 investments in 24 portfolio companies. So you can see from that we invest in multiple rounds as well. And as we go through this, I'd like the people who are listening who are looking for funding to just keep in mind that those members are a really core part of what we do, and you'll see why as we go through. Now, given that we're gathering to protect ourselves against coronavirus online, this picture might be a bit scary. It's a picture of a whole bunch of people in a room. And this is typically how, up until last week, Green Angel Syndicate was holding its pitch events. We typically gather 100, 150 people in a room, and we profile the businesses that we're looking at around about 30 every year. So we hold half a dozen pitch events and we profile 5 companies at each, so around about 30 in a year. But we get around about 600 opportunities each year for funding. That would be what Matt would describe as, I guess, frog looking rather than frog kissing. We look at a lot of frogs, at those 600 a year. And we end up kissing, let's say, 30 of them in our pitch events. And so we need a process to actually filter down all of those opportunities, which might be in resource usage, energy systems, anything to do with fighting climate change and global warming. How do we find the best ones that we end up funding? And here's how we do that. We have a pretty simple series of stages that we go through. This is just a really simple flow chart that describes that. But on the left-hand side, we've got these 600 companies coming into us in some way. So through our website, through connections that we make through our members, conferences we speak at, things like that. And they go through a series of filters that we then pare them down to a more manageable number. Some of them go out pretty early, within 5-6 seconds of reading their offerings, such as the helicopter taxi service that we were genuinely pitched last year, that said their eco benefit was they were going to reduce London traffic because people could fly from a heliport in London to Heathrow to catch their flights quicker. That went in the bin really quickly. And others that look much more robust. If they do look robust, and we had a call and some interaction with that business, we then start involving our members pretty early on. Now, we have a subset of our members called our associates. So we've got 200 members, maybe there's 35, 40 associates, and these typically are the people who invest the most in our portfolio businesses, but critically also want to get involved in helping those companies grow. And it's at this stage that we send them out digitally a very quick assessment. They get to see the business plan of the company. They get to see maybe the information memorandum, if there is one. And they just get to say online whether they want to invest more time and energy into these companies and hear more about them. So we're starting to involve our membership base. If they do want to put in more work to analyze these companies, then we'll actually send one of our associates in person to one of our client sites or have a web conference with them to really go through for a few hours their business plan, the competition, marketplace, and critically, what environmental benefits this company is going to actually have. And if we, the result of that is that we produce here a couple of pages worth of a profile document. And this just uses a very simple traffic light system to outline risks that we might see in different areas of that business, or the green light if we don't see any particular risks. So again, we're using our members here who have particular expertise potentially in these sectors to add some value to the wider group to start with. And then the wider group sees this document, the profile, and then effectively votes on whether they want to see this company pitch to our entire audience. If they then do get invited to pitch, our profile companies here have effectively a 2-week intensive process of shaping their business plan for our particular audience and being able to critically, I guess, explain exactly what their financial impact and what their environmental impact are going to be. This is an audience of people who really want to make a difference with their money, not just be able to write a check and expect a return, but they want those tangible other environmental benefits as well. So then we have our pitch event, and if there's substantial financial interest from our members at that stage, we'll move into due diligence proper. Now, even though we are an angel network, we really pride ourselves on running a very comprehensive due diligence process, which you can see some of the headings on the screen there. These are all the sorts of things that one would want to look at in terms of evaluating risk and opportunity in each of the sectors that will be critical to a company's success. And one of them, the third one down there, is Green Angel Syndicate objectives. In other words, how the environmental credentials actually stack up for this business. Now, this is a complex process, actually, the due diligence, and there's a lot to go through. And we want to get our companies to funding as quickly as we possibly can. So what we do is we use our members again here to get involved with the due diligence. Now, this is a snapshot on the screen of some of our members. Typically, members of Green Angel Syndicate will have a strong background in the energy space or environmental conservation space or in renewables. And we use these people to unlock, I guess, the value for some of the businesses that we're about to invest in, and really understand the risks that we may and the company may foresee in their future, and then to see how our membership can actually help those companies to really prosper in that market and deliver the benefits that we all need. Not just financial, but also the environmental aspects as well. And then finally, once we've done that and we've made an investment, most angels at this stage would just sort of walk away and say, great, there's your check, go and return me, give me a good return. Actually, that just really is the start of our involvement with our candidate companies, our portfolio companies, because what we do is we typically put a company on the, a member on the board of that business that will act as the conduit between them and us for really the 3 to 5 year lifespan that we expect to be associated with one of these businesses as they grow through future funding rounds and hopefully ultimately to an exit. So we have a dedicated member of staff actually who's just the person managing all of these contacts between our portfolio businesses and our members to make sure that we're maximizing the benefit that we can give to those companies as they grow. So I guess my message here for companies out there looking for funding in this energy space, and it's been so interesting hearing some of those growing businesses this morning, is that a syndicate focused on climate change and global warming specifically can actually add a great deal of value, because we select not just those who look to have a good financial return, but also to have a great impact for the world and help us all in the UK here deliver on our climate change obligations. And as you can see, we try to use our specialist members at as many stages as we can as part of that investment in order to maximize the return of that business and the effort of all of our membership base. So hopefully that's given you a flavor of an early stage investor such as some angels. And I'd be really happy to talk to any of you afterwards if you have some more questions for me. Thank you very much, Matt.
Thank you for that, Cam. Very insightful as always. And please don't hesitate, business members, to get in touch with all of the members of the panel. I'm sure they'd be delighted to hear from you. We do have to wrap up this session at 2:15 in half an hour, and we've got another 5 presentations to tick through. So I'll ask all of the investor presenters to try and wrap up their presentations to rapid fire 5 to 8 minutes, if at all possible. Many thanks. I'd now like to hand over to John McKiernan at ESB to give us an overview of ESB and the pre-electrons program. John?
Thanks, Matt. Can you hear me okay?
Yeah, loud and clear.
Okay, so my name is John McKiernan, head of the Innovation Pipeline and External Collaboration at ESB. If we can advance these slides, I'll try clicking here. It's not clicking. Yeah, so Shamrock for St. Patrick's Day. So basically, there should be 3 of those. So who are we? Why are we talking to the startup community and entrepreneurs? And what are we doing about it? So that's the 3 pieces of this presentation. So briefly, who are we? And I'll try and make it swift. Basically, we own and run the wires business in the Republic of Ireland and in Northern Ireland under the brand NIE in Northern Ireland. There's an independent TSO called AirGrid, so we don't do the TSO work. We're the DSO, and a lot of our wind is connected at a distribution level. We own a bunch of power plants and a few in GB as well. One of the most recently constructed thermal plants there in Manchester is one of ours, and we have a bunch of wind farms, and obviously our growth is all in renewables and wind farms. We have Tilbury in London as well, which is a biomass plant. So we're about half the generation in Ireland and a small chunk in GB. We're also in the telecoms business because we have fiber within our conductors. So we light up dark fiber for the major carriers. We also have repeater stations for mobile phones. So a little cash cav perhaps. We've also a $500 million joint venture with Vodafone called Cyro to bring gigabit fiber to people's homes, particularly targeting the 50 towns outside the major cities who have a critical mass but poor infrastructure. We also have own and run and operate the national EV charging infrastructure, the public charging infrastructure, and we've won a few concessions in GB recently, in London, I think Birmingham as well, for fast chargers. So another kind of infrastructure play, I guess, for us. And so in summary, we're a sort of medium/small utility in the US sort of European scale of things. Critically, we have over 2 million customers. We've about 100,000 recently acquired in GB as well, and we're looking for new things, I guess, to sell to those. So why? What's new? What's different? What's the push? Well, the main call to action is the fact that we're not on target to decarbonize. Economic growth and other things have we actually hit our targets during the downturn, basically because nothing happened here and we all switched everything off. But now the economy's recovered to full employment up until a week ago. We're back in the emissions world again, so we have to work harder to decarbonize. Specifically for Ireland, half of the non-traded emissions come from our feedstock. So we make food for 6 times more people than live in this country, and that gives us a big headache in terms of emissions. Agricultural emissions, 1/3 of the overall emissions in this country, so puts extra pressure to decarbonize heat and transport in particular. So I guess you could say the light bulb moment has arrived. Another metaphor is this lovely lighthouse, if it shows up, which is, and you were there standing at the door. So I've lost control of the moving forward, but somebody could click it on there. So basically we're in the middle of a perfect storm. We thought our job is to keep the lights on, but actually that's not our job, and that lighthouse keeper doesn't work there anymore. It's automated. Our job is to decarbonize and provide enriched services to our customers. Somebody click on to the next couple of bits there, because I can't. Yep. So that was the guy at the door. So UBS telling us, and it was mentioned earlier on, I think, you know, falling demand ultimately, if you're selling a commodity into a market and that market is shrinking or flat or shrinking, and with increased competition, you're not going to make a lot of money and eventually go out of business. So next slide, please, someone. So if we can, the challenge for us is to figure out where do we go from here. It's back again, great. So what are we going to do about it? Okay, so we have a plan, so you'd be glad to hear, a cunning plan, as Bolrick would say. We have a brighter future, and that's obviously you know, optimistic. And there's 5 key aspects to that. The first one is really putting the customer properly in front of us, you know, becoming customer centric after almost 100 years. In business is not often what you'd hear from many companies, but if you're supplying, again, a required utility, then, you know, people would buy from you. But now it's about finding new and exciting things to sell to them. Obviously, all the talk today, we have to decarbonize, and everything that goes with managing intermittent renewables, wind, solar, etc., storage, all of the things that were talked about this morning. So we have to make that happen, keep the lights on, keep the price down, and decarbonize. Okay, the trilemma. And you know, come up with a whole new range of exciting things. So, you know, rather than trying to pay customers to do stuff, you know, make them pull these solutions from us because they're new and interesting. Obviously, we've got to grow our business. We're probably hitting our glass ceiling in the Irish market. So GB is an attractive market for us to grow. We've been there for many years. All our electricity is priced off the gas price in UK. So we know that market very well, and it's kind of happy hunting ground for trying new things for us. So we have to obviously go for high performance with our staff as a 5th pillar, you know, less of the Homer Simpson, a little bit more of the trying to roll a round ball instead of a square ball. So, you know, high performance, it's not just good enough to show up for work anymore. We actually have to work harder just to stay afloat. So actually these red boxes are pretty much all of the areas that could benefit from working alongside fast-paced entrepreneurs. So simplify it down for us in particular, we're really looking for new options in 3 key areas: cost reduction on what we do already, performance and improving what we do already, and new revenue opportunities. And really it's all about, you know, finding the latent customer needs, because that's the growth for our future, new and exciting products. So we've built a program called Free Electrons with originally 7 other partners. Key thing is we've 80 million customers. That draws a lot of attention. We want to be a channel to market for cool stuff from the technology world, from the entrepreneurs on this call, hopefully. We can buy it ourselves, but we can sell it onwards to our customers. So it's really a platform where we trade. The startups get expert advice. The key thing is they get pilots, access to markets, access to customers, and of course this panel is talking about investment. So it's working quite well. We get some stuff as well, obviously, which I'll pass on, so we gain insights. This is the cohort from 2019 spread around the world, so it's a pretty effective radar. The program we ran a boot camp in Dublin this time last year, then the US, then we went to Hong Kong, and we finished up in Lisbon. So we brought all of the startups with us. And the key thing is we're doing cool technologies that you wouldn't think that utilities would do. For example, digital twin. This is a 40-year-old asset in Ireland. It's now being digital twinned, so because it's at the end of its life, and we need to figure out what's going to fail first. So we're using that tech from the oil and gas sector. Here's the results scores in the doors. So the pilots have doubled over the last 2 years. We've gone from 26 to 58 pilots, which is the leading indicator of are we going to do business. And also this year with a huge uptick, as you can see, 2020, 857 applications this year, up from an average around 500. 6-step process, which I won't go into because we have the speaking time today. And second last slide, I'll go back just there briefly. Good news is here are the actual applications this year. So we had 857 from 86 countries. 2 have been shortlisted for the boot camp, which is virtual and happening next week. Ripple Energy and Fintelligence, 2 from the UK. And the UK actually got a really good showing. So after the US, you'll see 108 from the US there. UK was second best in terms of headcount this year. So finally, if I could just wrap it up there, why would you do business with us? Who are we? We're the Irish. Why? Because we need your tech to grow. And what do we want to do together with you? We want to do pilots and more pilots, because if we don't do a pilot with you, we're not going to do a rollout. Thanks very much. Sorry for the gallop.
Thank you very much, John. It's fantastic. And I think for you who aren't familiar with pre-electrons, do get on the internet and have a look. Incredible route to market, you know, give access to businesses of 81 million customers. It's pretty rare thing. I'm now going to hand over to Joanne Fisk, who's an associate at Gravis Capital Management.
Hi, everyone. Are you able to hear me?
Yep.
Yeah, great. So I'll just apologise in advance that if you can hear me, you might also be hearing my neighbour who's decided to practice the trumpet at this exact moment. So my apologies for that, but I'll run through this quickly and hopefully you won't get interrupted. So yeah, thanks for asking me to speak today. So my name's Jo Fisk. I'm an associate at Gravis. So just going to run through a little bit about us and what our key investment drivers are, which hopefully will fit with what some of the people on the call are looking for in terms of their investment, the sectors that we invest in, and why we think that we're a good party to partner with. So for those of you who haven't heard of us before, Gravis is an investment management company which runs across a number of different strategies. I'm talking today about one of our debt funds called GCP Asset Backed Income Fund. So the fund is about just shy of £500 million, and it invests across a number of different sectors. And it really grew out of opportunities that we were seeing in the infrastructure space, but that didn't quite fit the mandate of our flagship infrastructure fund. So we really come from an infrastructure and renewables background, and that's the way that we kind of approach projects. And as I'll mention a couple of times as we go through the slides, what we're really looking for is that strong asset backing. So we're looking for something for which there's structural demand within society. And as you will be aware of the fact that we're having this online today, we live in interesting times. So it's be a good test of whether we really have focused in on that structural demand. So in terms of our fundamental investment drivers, we're really looking for three things. So protected investments. So we're looking for physical assets or contracted cash flows. So the clue's in the name of the fund. We're looking for that asset backing. So when we're saying physical assets, that can be real estate, it can be equipment. And when we're talking about contracted cash flows, generally we're looking at really long-term investments where we have strong contractual protection so that we know that there's going to be those cash flows coming in regularly and dependably from a strong counterparty over a long period of time. And as I mentioned, we're looking at assets that serve a purpose for society. So you'll see when I touch on our portfolio, but that has a huge variety of meanings for us, from student accommodation to care homes, battery storage projects, monitoring services for solar, rooftop solar. So there's just something that we're able to focus in on serving that purpose. Secondly, and hopefully there are many on this call today, we're looking for borrowers with really strong know-how. So one of the things that's really important to us, particularly as we're a small team, is building that relationships with our borrowers. We like to get to know people's businesses, and we like to see people who have a strong track record and that good knowledge base in areas that are able to grow. What that does mean, and I think that differentiates from other people on this call, which is why I think it's really interesting that we've been able to have the sort of range of investment on this call, is that we're not able to look, as Cam was talking earlier, about really early stage investments. We're looking for something that's a little bit further down that line. So whilst we're able to support growth, we're not the sort of best investment party for someone with this sort of new product that hasn't been tested in the market. And then lastly, how we operate. We, as I said, come from an infrastructure background. So we're generally taking a project finance approach, which means heavy, covenant heavy documentation. As I said, we like to be really involved with our borrowers, and generally it does mean as well non-call periods on our debt. To give a kind of flavour of where we sit, we're generally the sort of weighted average term of the debt in our book is about 6 years. We're generally, the interest rate that we're charging is about 8.1% on average across the book. And the term is, and the quantum that we're looking at is between 500,000, or we like to be able to see something grow to 5 million, up to say about 40 million. So to give a flavour of the sectors that we invest in, this is a snapshot of our portfolio. So we split things up into 4 areas: property, asset finance, social infrastructure, and energy and infrastructure. But as you can see, we're pretty well diversified even within those sectors. Hopefully the energy and infrastructure space, talking to some of the people on this call in particular. But as I said, that captures battery storage, it captures compressed gas stations, O&M contracts, which are one of those assets that we look at as having contracted cash flows. But also there's variety, as I say, across there with supported living developments, co-living, mortgages, and student accommodation as well. So it's quite a range of projects that we're looking at, not just in the infrastructure space. So what are we looking for? So hopefully that kind of, I've kind of touched on all of this as we've gone through, but something across those 4 sectors. With assets that have that structural demand in society, realizable value, and either a physical asset or dependable cash flows. And then most importantly, as I've put it, at the largest cog in that process is the people that we're investing in. So having that know-how, having some proven track record, and looking for a partner to build long-term relationships with. And lastly, we like to think that there's a number of benefits that we can bring to working with our borrowers. So as I said, we're focused on building strong relationships. We're a small team that's able to make quick decisions, and we're not constrained as some, say, bank lenders would be in that space. We're able to find creative, bespoke solutions for people that we work with. And as part of building those long relationships, we're able to help our borrowers grow, and we particularly like sort of growing and funding follow-on transactions. So I'll wrap up there, but just very briefly as well, we're not an ESG fund, but it is a focus for us, and we are really proud of the kind of social and environmental impact that a lot of our investments have made, and that's just a flavour of those there. So I'll just leave you then with our contact details. So that's me, Joe Fisk, and then the lead fund manager as well, David.
Fantastic. Thank you, Joe. Very much appreciated. Next, I'd like to hand over to Ben Watts and Onji. Onji and Innovate have had quite an interesting partnership, which I'm sure Ben will talk about shortly, as well as all the other interesting stuff they're up to. So Ben, over to you.
Thank you, Matt. I hope you can hear me okay.
Loud and clear.
Excellent. So I am going to talk to you about our Clean Growth Innovation Fund, which is a partnership with Innovate UK. But just before I do, I thought it'd be helpful just to give you some context about NG and the journey that we've been on more generally. So NG has effectively repositioned itself, transformed itself over especially the last 5 years. We have moved from being a relatively traditional utility to a much more decentralised and decarbonised and digitised organisation that's involved a divestment of £15 billion worth of assets over the last 5 years in the traditional thermal power generation sector, and reinvestment of that money in renewable energy, in digital solutions, and in services as well. We're an international organisation, as you will have gathered, and that investment in energy infrastructure assets in particular will continue over the next couple of years. Certainly there's commitments to an additional 11 billion of investment across the world, and a certain amount of that has come to the UK, where we are a very substantial employer across a number of major sectors. So we're across energy, services and regeneration now as well. And we are already a major investor in UK energy infrastructure. So we have around about £1 billion worth of energy infrastructure assets already within the UK. So that includes pump storage, where we own and operate the first hydro plant up at Norwich, North Wales. We have onshore wind and solar assets. We have a large portfolio of district heating and cooling assets under partnership with local authorities in major cities in the UK. We have an EV, a rapid charging EV network, which is growing quickly. We have a number of industrial energy generation and embedded generation assets as well. I will skip through these. So in summary, we are investing in sustainable zero carbon infrastructure as part of a wider strategy and purpose around helping our customers to transition to a zero carbon future. we're bringing together and integrating energy, services and regeneration in places, and we're enabling some of this through technology, data and through innovation. I think this, on the latter point, I will just slow down very slightly, because it's really our open innovation strategy and plan which has been the genesis of this programme that we have running with Innovate UK now. So we are very much interested in collaborating with others. So yes, certainly startups and SMEs, but also other industrial partners, with academia and with other stakeholders and other funders. So just as an example, we are project lead on one of the detailed design smart local energy systems projects that's just been announced for a project in Rugeley, which is adjacent to one of our former coal-fired power plants, which we are redeveloping as a sustainable community. And that's a large consortium that includes academia, includes other industry partners. So that's one example of how we're investing our own time and resources in developing solutions with others. But in addition to that, we have now established a specific fund that we've established jointly with Innovate UK, and this is drawing on our venture capital fund, which sits at the group level within ENGIE. So there is a VC arm which manages a fund of about 180 million euros across the world. We've effectively ring-fenced a proportion of that and match funded that with a grant from Innovate UK through Innovate's Investment Accelerator programme. The reason for that is to enable us to engage with external innovators earlier than we would typically be able to do through this route. So our new ventures teams, typically Series A, Series B, typical ticket size will be 3 to 5 million. Here we're looking at much smaller amounts of funding at a much earlier stage. So in terms of the eligibility, we're really looking for activity which falls under the category of industrial research and feasibility, so fairly low TRL levels, and as I say, for relatively small amounts of funding compared to our traditional new ventures activity. It's very wide in terms of the sectors which are eligible. Pretty much anything that you can imagine would fall under clean growth is in scope, so mobility, distributed energy, alternative fuels, renewables, etc., and behavioural change, importantly. And in terms of benefits, I think in terms of the companies that we support, it's about access to market, access to expertise across the ENGIE group, not just in the UK, access to capital, of course, and opportunities for partnering. I think from our perspective, it's about access to this external pool of innovation that we are very conscious we need to engage with in order to move forward, or to continue to move forward. So a really exciting programme of activity. We kicked off in June of last year, as it notes on the slide. It's a programme. We're sort of year 1 of 3. If anyone is interested, then please do reach out directly to me. I'm very happy to have more detailed conversation, but I will leave it there for now. Thanks, Matt.
Many thanks, Ben. And I'm delighted to say that Jenny has very kindly given us another 15 minutes so that we've got time for our remaining speakers. So without further ado, I'll hand over to Ingmar Grayman at Goldman. Ingmar, over to you.
Thank you, Matt, and good afternoon, everyone. So before I start on the slides, let me maybe tell you a quick short story on my personal energy revolution. So I love Saturdays, only day when I can vaguely sleep in. No office, no meetings. My wife wakes up with our 5-year-old, maybe a quiet coffee and a glimpse of a newspaper. Now, one reason Saturday, however, I woke up at 6 a.m. because the room was boiling hot. So I get up grumpily, check the thermostat, nothing wrong, convince my wife to let me sleep in on Sunday instead, and move on. Now, Sunday, 6 a.m., same thing happens again. The room is boiling hot and I wake up. Now, since I'm awake anyway, I make my way to our 5-year-old's room, and there she is, fully awake, with her iPad on the knees, moving happily the temperature bars around. Clever girl had realized that the fancy new app on her iPad could control our smart heating system, and that Daddy was much more likely to get out of bed if the color was dark red. Now that's when energy revolution hit home, literally. And it occurred to me that when I started doing energy investment 8 to 10 years ago with Goldman, what we were looking at were like large scale CCGT power generation assets. While today, when I spend time in the sector, it is most often, it is with startups that are gradually transforming the way we produce, manage, and consume energy. Now, with that anecdote, let's get into the slides. If someone could switch the slide for me, that would be great. Thank you. So who are we? Goldman Sachs, as most of you will know, is a large global investment bank. We've got businesses where we act as agents, such as the investment banking business or the asset management business. And we have principal businesses, such as global markets, where we act on our own account. Now, Goldman's Commodities division is part of our global markets business. Goldman Sachs has been active in commodities since about 1981, when we acquired a trading house called J. Aron, and it has been an important division ever since. Now, in the commodities division, we trade a broad range of commodity products, including electricity, gas, carbon certificates, etc. And we also have a team, the structured finance and investing team, that deploys Goldman's balance sheet to fund and invest in energy companies. And as I alluded to at the beginning, historically, that used to be larger scale power generation assets. Today, this is very much focused on the energy revolution. Next slide, please. Now, this slide is just to say that we're a truly global organization with commodity teams across the world and trading hubs in New York, London, and Singapore. Next slide, please. Now, what are we focused on? So in late 2019, our CEO, David Solomon, made a remark saying there's not only an urgent need to act, but also a powerful business and investing case to do so. And what he was referring to was a 750 billion sustainable finance target over the next decade that was supposed to be implemented, that is supposed to be implemented through financing, investing, and advisory activity related to climate change and inclusive growth. So within Goldman, there's a strong focus on sustainability and climate transition. Now, within the commodities division, the energy trends that come under that headline and that we're focused on are as follows. First and foremost, there's the exponential growth of renewables. So if you look at BNEF, for example, they expect that 92% of the power stack in Europe will be renewables by 2050, or 43% in the US. Now, that high penetration of renewables comes at a cost, because renewables are an intermittent source of power, as you all know. No wind, no sun, no power production. So the short-term imbalances and market volatility that will come with such a high penetration can be quite dramatic. So if you look, for example, at the chart next to the renewables growth chart with the red spikes and the red shading at the bottom that you see here represent the future Spanish power market in a low and a high renewable generation week. And it gives you a flavor of the magnitude of volatility that the high penetration of renewables can cause. Now, what's the solution? The solution, first, is using clever technology and data to forecast and manage renewable assets. And that's the first building block that we're looking at on the right-hand side. Second is to have enough reserve power on the grid, and that is batteries, peaker plants, at some stage maybe hydrogen, to spring into action when the renewables don't run. And lastly, and that's the third building block, the third of the four building blocks on the right-hand side, is the retail side of things with demand-side response and distributed energy resources. Now, these are the first three areas of focus for us. The fourth area is slightly different, and it is the carbon pricing and markets. Now, it's widely recognized that carbon pricing is an important tool to achieve net zero. And currently, globally, there's 57 carbon pricing schemes in place. They're compliance markets that have been around for a while, like the EU ETS or California or South Korea, and that are quite mature and quite well understood. But then there's also the voluntary or offset carbon market that is a much more earlier stage of market development and where trading volumes are still small. However, this sector is about to change because 2019 saw a large number of corporates announce net zero carbon targets. Also, CORSIA, an offset obligation for airlines, is about to kick in. And all these targets can really only be achieved with offsets. Now, so for any of you in the, on the startup side, whose company contributes directly to reducing carbon, I think should keep an eye on this, because carbon credits are a nice additional revenue source if you qualify for one of those schemes. Next slide, please. Now, what does it mean to have GS Commodities as a strategic investor? Now, someone clever once said, starting a business is about 20% idea and 80% implementation. And I think that's also what's reflected in the points we focus on. First, there needs to be a clever idea and a good market opportunity. But then there also needs to be implementation. So a scalable business model and ideally an experienced management team. And then lastly, at least in the commodities division, we only invest in things that we also understand. So there needs to be a nexus with what we currently do or what the commodities division currently does. Respectively, it would need to fall into one of the focus areas that I outlined before. Now, if that's not the case, that doesn't mean that there's no home within Goldman, because within the asset management division, we also have funds that focus on earlier stage companies. So there's a growth fund, for example, that would happily look at other opportunities and that we can refer to. Now, once invested, what does the interaction look like? So there's some have-to-dos. We have quite a strong focus on corporate governance, board representation, monthly commercial and financial updates. Then there are the nice-to-haves, like the ad hoc discussions with the management between Goldman staff and the management team, potential cooperation on selected topic with GS Global Commodities. And then there are the additional benefits. And that's really the access to GS Global franchise, including the different type of profession and staff you have. And I would refer back to the slide with the map I showed. The advantage for smaller companies that are looking to enter into new markets is really that Goldman really is present globally in all the major commodity markets. And then lastly, the support of the company's strategic planning with like input from some of our experienced sector professionals. Now, in order to conclude and to bring this back to my anecdote at the beginning, if there's one takeaway from, I think, my investing experience that I would tell to startups, I think irrespective of what your energy revolution looks like, keeping your hands on the temperature control and don't let it get too hot and don't let someone else play with it is quite important. So what does that mean? So if you're running out of funds, don't wait, go to the market early to raise more. Or if your sales are below expectations, don't wait, change your strategy, change your staff, adapt, because implementation is 80% of your success. Thank you.
Fantastic, Ingmar, what a great speech, fantastic presentation. With 5 minutes to go, I'm now going to hand over rapidly to Guy Ranawik at Ingenious. Guy, over to you.
Good afternoon, everybody. Can everybody hear me?
Loud and clear, Guy.
Excellent. I've lost the little arrow, so if you could go through to the next slide. Great stuff. My name's Guy Ranawaki. I'm a senior fund manager at Ingenious. Ingenious is an alternative fund manager. We invest across 4 sectors: real estate, media, infrastructure, and education. And I sit in the enterprise investment scheme piece, the infrastructure piece. We invested about £700 million to date in the sector. Next slide, please. So within infrastructure, we've historically invested in clean energy. So that's wind, solar, anaerobic digestion, a bit of compressed natural gas, which Gravis have helped us with. But more recently, we've been focusing on startups and taking minority stakes in those companies to develop and grow. For us, infrastructure is energy, mobility, resource efficiency, and digital. And in terms of investment size, we invest in what we call late seed, Series A, Series A plus, which is between £1 to £5 million. So that's a little bit above Green Angel syndicates, but and a similar size to the Clean Growth Investment Fund. So what are we looking for? And this ties in with some of the points that Ingmar raised. We're looking for an experienced management team. I'd much rather invest in a good management team and a poor business plan than the other way around. We're looking for startups operating in large addressable markets with scalable business models. We're slightly unusual in the sense that we are happy to invest in both hardware and software, but we typically look to support businesses which are B2B rather than B2C. We don't feel that we have much to add in terms of marketing plans, trying to tap into retail markets. It's important that the technology being applied is proven, TRL 8 to 9. We won't do demo plants. We won't do the first commercial plant. We are really there to help develop and grow existing businesses which have already proved there is a demand for that product. And that's what we capture by this clear route to market point. We're typically looking at companies which with annual recurring revenues of between 500,000 and £1 million, but we can be flexible. That's both on a historic and a projected basis. And we're looking for businesses with barriers to entry, and that could be anything from intellectual property, patents, in-house algorithms, domain knowledge, exclusive sale channel partners. It's also important to note that we are an EIS service provider. EIS Enterprise Investment Scheme is a very attractive tax break. So to listeners to the webinar, I would strongly suggest that you take a look at that. But it does have certain restrictions on what one can and cannot do. But all in all, it's a very attractive tool to raise money with. If you could turn to the next slide. So we've launched this service a couple of years ago, and the first service raised £20 million, and we are investing across 7 companies. So it's taken us about just over 12 months to raise the money. And if we go on to the next slide, we can see the type of businesses that we're looking at. So that's £20 million across 7 businesses. And you can see the kind of the check size of between 1 and close to £5 million. A range of businesses. So if you remember back to our first slide, we're looking at energy, mobility, resource efficiency, and digital. But we think that gives us gives the investors some risk diversification, both through the number of companies, but also through the scope of work. And typically, these companies are between £5 and £25 million in terms of pre-money valuation. So we're taking minority stakes, but looking to take a board seat. If we go to the next slide. I thought I'd highlight one of the companies that we've invested in, which is relevant for the energy space. There's a company called Reactive Technologies, and we've talked about renewables a lot today. They provide an inertia measurement system to grid operators. As you know, as the grids decarbonize, you're taking off the large coal and gas-fired turbines and replacing them by wind and solar. But that leads to kind of greater instability in the grid, leads to less inertia. And Reactive have a tool, or developed a tool, which allows grid operators to measure grid inertia in real time. And why is that important? Well, it's trying to help the grid operators avoid the blackouts that we experienced in August last year, when shocks to the system mean that the grid can't react quickly enough to avoid brownouts and ultimately blackouts. So it's a really interesting tool. And if we go back to our the various metrics, why we thought this was interesting. Management team, very experienced management team, and a lot of the technology comes out of Nokia, which is important in terms of the grid inertia measurement piece. Is operating in a large total addressable market. Renewables are becoming increasingly important. I think we heard Ingmar say that renewables are expected to take 90% of renewables by 2050, and it's a scalable business model. It's a combination of both hardware and software, focused on B2B, and they've got some really attractive key customers, including National Grid, which is a great name to mention when talking to other grid operators. In fact, I think we've got conversations going on at the time with the ASB as well. It's proven technology, which is important, and it's got annual recurring revenues which meet our criteria, and it has robust barriers to entry. So this is the type of company which we were interested in, and it's got a strong group of investors. We came in after Res and Octopus, but before Equinor, and looking to help the business develop and grow over time. Next slide, please. So what do we bring to the company? It's not just money. If it was money, I think one of our earlier speakers said that there's plenty of money in the market. So the investee companies really should have a pretty good choice if they can meet those criteria that I've mentioned previously. What we like to say we bring to companies is that we're sector focused. Unlike some of the other service providers or investors, we're very much focused on infrastructure. That's to say energy, mobility, resource efficiency, and digital. And the great advantage of that is that when we're speaking to the investee companies, we are speaking the same language. So when we talk about megawatts or megabits per second upload, download speed, they don't need to educate me on what I am talking about or what they need to be talking about. It's easier for us to understand the models. I come personally from a project finance background, so I understand when there are assets involved, of the kind of the complications in originating and executing projects. And so what we can bring to the company is access to our own network, and not just my own personal network, but those of my colleagues. We're 150 people, so that can be a very rich source of business going forward. Once we are involved, we typically take a board seat, depending on the size of stake we take, and we then can provide access to the Ingenious centralized services for companies which are looking to develop and grow, and that covers marketing, legal, finance, tax, company secretarial, and HR. So we've had conversations on share option plans, commission structures, EIS tax relief, something which I think if you ask the investee company, they found very, very beneficial. And we do some very simple things. We have a nice office in central London, so we are very happy to host board meetings, commercial meetings, and in fact away days as well. So I think it's very important when we do our due diligence with the companies is that our interests are aligned and that we want to be spending time with the management team. The management team want to be spending time with us. If you could turn to the next slide, I think that is it. So thank you very much. Any questions, very happy to do that going forward. Many thanks.
Thank you very much, Guy. I'll now hand back to Jenny, and just to thank all of our speakers, and please, for the business community, watch this space. We'll be instructing our strategy in the coming weeks and months, and look forward to getting your feedback and your support with delivering it. So many thanks.